Howdy, Jacob here. Today we're looking at Bellring Brands in the personal care products industry. 7.4 billion market cap on 8.2 billion enterprise value. Price to book is negative, so we are seeing likely that they're, or for sure with a negative price to book, that their equity on the balance sheet is negative, meaning they have more liabilities than assets. But if we're looking at the company as a whole right now, fantastic growth over the last couple of years, double digit and gross margin still pretty solid, low 30% operating margin, also very solid in the double digit percent range, 15%. Very solid production of earnings per share, return on invested capital recently very high, but historically pretty mid. Um, Balance sheet shows 48 million cash on hand with zero short-term debt, 857 million long-term debt. So this is why we see the negative price to book is that they have negative 323 million in shareholders' equity due to having more liabilities than assets. So we're going to have to see whether that's fine or not. If a company does that, it can be fine if they produce enough free cash flow. And so let's look at this free cash flow. So about 800 million in long-term debt, and they do produce $200 million a year, at least two of the last 4 years, even 100, not bad. So if it is the 200 million goes into the future, then that's just 4 years of their free cash flow to for that debt figure, and they have been paying it down every single year, and so that's really not a huge concern of mine. Um, the debt would not be a huge concern of mine. I would just want this company to. It looks like paying down debt and then buying back shares is a majority of their free cash flow. They aren't paying a dividend or anything. Doesn't look like there's much acquisition or reinvestment opportunity, or doesn't look like there's that much activity going on due to having no capital expenditures. It's kind of interesting that there'd be no capex for um, a business like this. The company offers ready-to-drink protein shakes. Okay, maybe that's it. Okay, Premier Protein. Okay, interesting. I've bought some of that. Distributes through Club Food. Okay, interesting. So yeah, I mean the company's figures look very nice recently. I mean you're looking at great net income, great free cash flow. We're just gonna have to see whether we think that that can hold or not. So on the revenue growth side, I mean they've been growing like crazy. If we think they can keep it up, that could easily make this a decent investment. But I'm always a bit on the conservative side, as that's just my internal self as a value investor. I never want to be too optimistic about things, and so I mean I think 8% seems pretty reasonable to me. I think that their margins are growing. I think I'll probably lean on the heavier side of margins here. And then for share change, they have been buying back more shares recently. 1% would be about 74 million. To offset stock-based compensation, you're looking at about 90 million. And I mean, they can do that. I think that that seems fairly reasonable to me. And then, yeah, I think by the end of the 7 year period, their enterprise value is going to be pretty much the same as their market cap. And it's still going to be a growing business, I think. I think that, it is, there's a lot of competition in the protein market, but Premier Protein I've seen in a lot of different places that I shop. So and I've definitely seen many people grab it from the shelves. So maybe an 18p price free cash flow. Yeah, I mean, even with my assumptions, it needs to fall over half. I think that that's still fine to me. Um, I do like that free cash flow is a lot higher than net income, but again, every investment's the present value of future cash flow, or most investments are. And I think that in this case, um, it's just not so attractively priced. I think that if you really understand this business and you think that they can get 50% of return a year for the next couple of years, then maybe it could be a decent one. But for me right now, the gross margin is just 30%. It's not like it's a software business where it's 80%, where they could really push the margins to 30, 40% on the operating side. I'm just a little skeptical, and I'm comfortable with these comfortable with these projections to where I'm just going to wait a bit. So, I do hope you enjoy the video. Have a great rest of your day.